mean, you're going to have, when you apply with us, you're going to have the purchase loan, and we're going to already have that refinance set up. So the minute you sell that house, we're going to already be teed up and be able to lock your interest rate in. And
approved everything.
Same underwriters already looked at all this, and it's a lot more cohesive than you think than just two loans out there. We are live with Lori and Ashlynn and
NMLS.
What kind are these today?
Cranberry.
Oh, they're good.
I know. Yes, they are. Okay.
Going to continue on home to home, and maybe this time kind of go into some of the pros and cons and kind of go into a little bit deeper. If you watched the other video, we kind of just basically told you the motivation and what was going on, but we want to dig. Yeah, we kind of want to dig just a little bit deeper in this one.
Yeah, so I think we get a lot of, I guess, FAQs, frequently asked questions with the product. I know that we probably repeat the same thing over and over again. So Lori, I'll start with you. Like, what's kind of one of the questions that you get?
Two closings. Is it more money? I mean, that's truthfully, might as well just say it. If people think it's more money, when in truly it's not, because we, we
do have to pay closing costs twice.
Yeah. And we use some of the same, we use the same title, we use the same, or not the same title, the same appraisal, credit report. A lot of these things we don't have to do twice. And so Ashlynn has actually, in some of the roadshow classes that Ashlynn's talked about, she's actually compared the numbers and made it very visual for her clients.
Yeah, so we'll just kind of break down really quick what you quote unquote are paying twice and what you're not. And we'll even put something up behind us or on this video that kind of shows that cost comparison. But with the lender fees, again, you have two closings. So you pay your lender fees at the first closing, and the second closing we give you half a credit back. So that way, help. I mean, we still have to underwrite two loans, things like that, but we still give you half of the credit. So then going back to title fees, there's a lot of title fees that you're not paying twice. Owner's title policy you pay at the first closing. You're not going to pay owner's title at the second because you are the owner of that house. When we close on that new house, you own the house. You don't have to pay owner's title policy for the second one.
So it's a lot cheaper.
A lot cheaper. You mentioned appraisal and credit report. Those two things are good for 4 months. And if we go past 4 months and have to re-pull a new credit report or order a new appraisal, with the appraisal, go into that one, we basically do like a value cert and make sure that the value hasn't changed, so it's not a full appraisal going back to the house. And that's only, again, if we don't close within 4 months. So most of the time I haven't had to order a new appraisal or a credit report. So those are kind of some of those fees. Escrows, taxes and insurance. So with the first closing, if you're paying your first year of insurance premium at that first closing, we're not collecting it at the second closing. If we have to collect reserves for your taxes and insurance, we're collecting at the second closing, not the first closing. So again, we're talking about all these fees that you can hear are not being paid twice. Just some of them are paid at the first and some are being paid at the second, or vice versa.
And to make it feel better, I mean, you're going to have, when you apply with us, you're going to have the purchase loan, and we're going to already have that refinance set up. So the minute you sell that house, we're going to already be teed up and be able to lock your interest rate in. And
approved everything.
Same underwriters already looked at all this, and it's a lot more cohesive than you think than just two loans out there. It is side by side. The loans kind of hold hands with each other all the way through the process, and so that's why we're able to, not have to charge two underwriting fees and pay the underwriter.
Yeah, we're submitting them at that first closing when they first are going to buy the new house. We're sending both files in at the same time to our in-house underwriter. So that's a good point.
So the pros to me is there might be, $1,500 or whatever, $2,000, depending on the price of the house, what you're, you may pay just a slight much more, but the convenience of what you're getting and the outcome of doing that is huge.
Yeah. So a lot of people haven't really, I had somebody where I think it's $2,500, just again, the cash to close difference, because again, we will compare them for you so you can actually see, because some people haven't had to use the home to home. We qualified them.
That's true.
And then they ended up, the timing worked out to where we got in with a non-contingent offer on that house, but then they sold their house, which is great too, because now you won the offer with this loan program, but didn't have to actually use it. We just switched it to just one purchase and you're done.
That's true.
So, sorry, I got off on that. What were we talking about?
Pros and cons.
Pros and cons.
Yeah.
Closing costs will compare. Oh, my client, they really were okay with the $2,500. And again, that was basically just their title fees. was the cost difference for closing again.
You're not paying points on the first one because it's a fixed rate,
Yeah,
interest only. So we're going to be looking at that deciding, with you about when you're going to lock in and what's going on with the market. And I've locked one up front. I haven't locked one up front, and it's just, we'll just discuss that with you, what your feel and what we think is going on in the market at that point. So.
Yeah. So there, again, I think we covered a lot of the pros and cons. The pros, you don't have to move twice. The closing costs aren't as much as you think.
Mm-hmm.
Cons would be if you do see a con being I have to pay an extra $2,000, and maybe that convenience is not worth it to you, which is fine. Again, the product's not for everybody. The last con I think I would say, or not con, but frequently asked question is, what happens if my house doesn't sell? And we get that a lot in this market too. We're
going to do one more video, I think, on that, but we will say this is temporarily made for, it's a 6-month interest only loan, and we don't want you. We want the house to sell in 2 months. So watch the next video, and we're going to do just that. If how we handle
we'll
and
cover the whole. Because that probably would be another
whole video.
Yeah.
So
awesome.
Watch that. Thanks, guys.
Thank you.